Something very interesting is happening with Uber. So first off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. So we have Uber under the megatrends, and you can see that the average performance from the low is monstrously outperforming here the S&P 500. When we look at the specific theme where we find Uber, 184-ish average from the low, minus 18-ish% pullback. So I call it, sharing and renting. So these are like new economic models that are broadly called, the sharing economy. So here is Uber. I call it just Taxi 2.0. So there's a 76% move from the low, but we have gone through a minus 22% haircut, which is, significant. So the company is called Uber Technologies. So here's their mission: we ignite opportunity by setting the world in motion. So ESG report takes some time until they really tell you what they are about, but they do not need a whole lot of explanation, frankly. Yeah, most have tried an Uber. Here is the chart. We do see some interesting technical patterns. So this rally here was formed through, one of those classic, inverse head and shoulders pattern. So you got the shoulder, you got a bit of a head, and then you get the shoulder, and then you have, a nice breakout. We have recently pulled back to this green 50-week moving average, where buyers did show up. But I think that we have to go here to the daily data points to get, that more granular picture, because we don't really have that much history. So we are currently testing the rather important red 200-day moving average, the most watched of all moving averages. The interesting thing is that Uber has, a history of actually interacting with it. So you see pink arrows, it has been resistance. Blue arrows shows that it's primarily been a support level. The interesting thing is that we are now testing it after a pullback, which is one of the more interesting, potentially bullish ways to trade, that moving average. The only caveat here is that we are testing it rather vigorously. You ideally want to go down there and then see a rally. Now the bulls are a bit they're pushing their luck. They need to actually start to move to the upside here, because if they start to goof around here, then the bears are going to take notice, and we could have a break. But generally speaking, the moving average tends to hold, but there's been, some times where the bears do try something a bit more ambitious. Looking at RSI, we are at, a relatively low level, historically. The correlation here with the S&P 500 isn't that strong either. 43-ish positive, that's modest. There is a seasonality, but given that we only have really kind of 2 years of data, there's no point really in thinking too much about it. But this is what we do have. The seasonality tends to be weak for June and July, but we have very little data. So here is Finviz. They draw the trend lines. You could argue that there is some horizontal resistance around here. When we look at analyst price targets, and look at most recent developments here in 2021, so the stock is currently at $50, and all price targets are significantly above the current stock price. That is bullish, and these are, very, relatively well-known companies in the financial sector. So what they say about, the price has weight. Looking at, the target, the mean target price, they suggest a 38% upside. That is bullish. Saks.com, they have a number 3 hold. They have an F value score, C growth, C momentum. Industry rank, bottom 24%. I'm a bit puzzled by Saks because it's been a bit of a theme as of late as I do analysis, is that there tends to be these divergences between the analyst price targets and Saks. because basically based on these price targets, and these are relatively recent, it doesn't make sense that Uber is an F value stock. So, and I've also seen cases where Sachs has an A value score for a stock that others think are highly overvalued. So yeah, I'm not entirely sure what to make of that. So here is the market cap, 94 billion US dollars. There is no dividend at all, which is not a huge shock for these kinds of stocks, but it's what it is. So if I were to sum up my take here for Uber, I think that the company is interesting. It's in this whole sharing economy space. Its growth has definitively been limited by the lockdown and that entire situation. But it's now at a low level. It's one of those stocks that you expect there to be a bunch of bulls sitting on the fence, waiting to put on a position, and this is a pretty good time given that we are at support. We have recently had a pullback, which means that the risk is actually being reduced. It is undervalued, at least according to the analysts. The algorithm from Sachs does not think it is undervalued, so there's that. So there's a bit of a conflict. I think that putting it all together, it is much easier to make a bullish case here for Uber than a bearish one. The big, X factor for Uber is definitively this whole thing about their business model, because they are effectively trying to avoid a bunch of regulations, because due to the way they categorize the people who work through Uber. I think we could put sort of Uber, in the same box with other, companies in this space, but also, frankly, the crypto industry, in which there's been a bit of a movement against regulation. However, I do think, that the regulatory forces will strike back pretty harshly. The primary reason is that the vast majority of countries in the world, well, almost everyone, have huge pension and healthcare expenses on the horizon. Huge. So government have these huge bills that have to be paid, and the citizens, they do want these public services. The government just has to try to get money from any kind of place, really. So yeah, I do think that not simply looking at companies like Uber, but also I think that these big corporations that have been able to avoid all kinds of different taxes through very clever accounting. I think also that they will also be hit going forward, because many governments they're not in a desperate situation right here and right now, but it will become increasingly desperate because the bills are just simply humongous. But that is what happens when you promise a lot. Okay, so yeah, whatever you do, of course, you want to let the trend be your friend and be agile in this market. Ideally, be a market neutral, because we have the major indexes, like the S&P 500 as an example. It's still at a very high level, and when it is at this high level, very overextended, the risk is very significant. Risk is reduced after pullbacks. That's how it works. But the current setup we have here for the SPY, just to put it up, it hasn't really cooled down at all. It has been playing around with the 50-day moving average in green, but you see that when looking longer term, it likes to play around with the blue 100-day moving average very frequently, even the 200-day moving average in red. It's after those kinds of pullbacks where the risk has been reduced and you can feel more complacent. But at these levels right here, after such a protracted time without a real break, there is risk.